Hello traders, Gary Wagner here. Approximately 10:30 in Hawaii, 4:30 in New York on Wednesday, the 15th day of January 2014, and this is the daily report for gold and silver. Although coming off of the lows this morning, the market is still trading moderately lower on the day. Gold is currently posting approximately a $5 decline, trading roughly between $12.39 and $12.40 as we speak. Silver is also trading lower, off about a dime, as you can see. 2012 is the print on the screen. The low has been 1988 and the high 2033. In gold, 43.60 has been the high and 33.90 has been the low. Traders, want to start today's show by looking at a 240-minute chart. This chart is in standard Japanese average format. Each bar, of course, represents 4 hours of trading. And as you know, we initiated a short position roughly at 12.45 price. This was on Friday, and that was right about here. The market then did trade higher. You can see that it hit these tops at around 53, but it does seem as though we have found some real resistance in the market, because from there we've been tracking genuinely lower. Now we're currently trading at around 12.40.30, and we have a couple of different areas that we are looking at in terms of support as well as resistance, and those are going to be the primary topics all on today's daily report. Now traders, all I have done is taken our 240-minute chart, converted it to a standard candlestick, and compressed it so we could see the various levels that we're looking at in terms of support and resistance to have a clear-cut idea. Right now, as I said, market's trading at 12.40, and it is trading just under this 50% retracement. The retracement is a retracement simply of this range. The range on the high just below 1300, 1294, and on the low 1186. This range here, and it's a 23% retracement. Now, it is just tracking quite just under it, because 43 is really one of our points that we want to look at in terms of resistance at this point. In terms of support, you can see it's come up just a little bit off of the lows, and our next real level of support has got to be roughly between 1227 and 1231. And so if the market is going to continue its fall, we want to see how it reacts at this point, because if it breaks through there, then our real next target has got to be 1211. If it stalls and begins to move up, we might have a different tact or a different strategy in there. But for right now, the areas that we really want to watch, we're trading at around 1240. If we continue to see the market fall, we want to see how it reacts at 1231 and then at 1227. Now traders, we're looking at our half-a-day standard candlestick chart, and really the defined areas that we have been looking at are a little bit clearer when we look at it as we compress the chart. First of all, the 1253 area. This is an area we've now identified as having some real resistance. We can see that by the nature of this top. Of course, we talked about the fact we entered the short right here. Market did trade up a little ways, but is now moving down. You can also see that in terms of a small candle pattern that we have here, it is a piercing line, and it's just a little bit of a recovery off of those lows. I believe the lows, as we said, were around 36 to 39 today. When we look at that, we talked about the areas of 27 and to 31 in terms of major support, and I need to move this line. We'll just get this out of here completely for right now. But this is at 1227 that we spoke about. So these are the next sets of key levels. Should this market continue under pressure, this is going to be our initial target in terms of our exit strategy. Will be roughly somewhere between, as I said, 1231 and 1227, and see if it finds support. If it does not and it slips through, then we want to look at 1211. Now, we're looking at our daily chart, and it's on this daily chart that we have been plotting our current Elliott wave count. Of course, this is our long wave 3 down, our wave 4. My belief is that we're in wave 5. And I believe that what we are seeing right now is the beginnings of that wave 5. It can truncate, it can move to any point. When we look at the candlestick type, it's almost a hangman type candle. You've got this very, very small body size as of right now, and you've got a longer tail representing the low. So what it's telling us is that if it closes around here, currently trading at about 1241, if it closes around here, we could have a small gap in the market. We would look for that to come and get filled at some point. But more importantly, this small body size indicates that we are still on the potential of this real reversal in the market. We haven't seen the follow through that I'd like to, but we are seeing lower pricing as of this point. Now, here's a very interesting chart and study. All I've done is converted the daily chart we have just been looking at back to a Japanese average format. And of course, that's always going to lag behind, but let's go ahead and blow this up so you can get an idea of what we're looking at right now. Today's candle is this doji-like candle. Remember, we saw a candle that was almost hammer-like when we looked at it in standard format, but we're getting this pivotal candle that we tend to get as the market forms that V. What I mean by the V is it makes that top and then begins to come down. This is our pivot point. The fact that what we're looking at right now is very much a doji, to me, speaks a lot of power to the potential to see this market move down a little bit more than it has. We've talked about the different areas, but there's no doubt when you look at this candle type, and let's go ahead and kind of compress this. We talked about this a little bit yesterday, but it always seems to impress me when I look at different areas of the marketplace itself, and then you get to see these clusters of dojis or single dojis. Here you're getting this big cluster right prior to the sell-off. As the market comes down, you get really mixed signals. You go from red to green to red, then to back to green. So you're getting a lot of noise and an uncertain bottom. This is that bottom, the first bottom at 1181. We look at this top here. We've got some dojis here. You don't really have, but you do have a small body candle, but not really a real doji. And here you've got this pivotal candle right here. So the fact that we're seeing some sort of pivotal candle, as we spoke about yesterday, to me states and lets us know that this market could in fact come under pressure. We're not seeing real bullish signs right here, right now. Now, we started to talk about some of the key distinctions between gold and silver just by looking at the charts. And of course, on gold, we've seen a dramatic and a nice upswing as the market hit that low at 1186. It moved up. At the same time, when we look at silver over the same period, now this is a daily chart, by the way, you can see this incredibly tight range that we talked about. We have real defined tops. Those tops come in at around 2050, as we spoke about yesterday, and defined bottoms at around 1925. You can also see the market genuinely oscillating between the highs and the lows of this very, very compressed range. And my belief is if we see gold go lower, we could see silver follow suit with that. There's no doubt. But this to me almost seems as though it's forming a base, and a base that's formed will typically happen before a large move, whether it's a large move to the upside or the downside. There's no doubt we're building the sideways trading market or building a base within the market. For right now, my recommendation is obviously to maintain our current short positions and to maintain our current stop placement. I am looking to trail the stops tighter, but I want to get a little bit more breathing room before we do that. If the market does begin to move up, I'm not afraid to take that stop to the market, meaning to take a smaller risk on there. But as for right now, the market is roughly in the area that we entered the trade, and in gold, we've got a good $3 to $5 on the trade. A little bit of breathing room is starting to develop. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.